What if I told you that a single speech, delivered inside the walls of the United States Congress, just set off a chain reaction that could rewrite the rules of the American housing market forever? Not a slow policy tweak, not another empty promise, a structural shift, the kind that happens once in a generation. And right now, millions of Americans are watching their dream of home ownership either come back to life or slip away for good. Depending on one thing, whether Washington actually follows through on what was just said, let me walk you through exactly what happened. Because if you own a home, rent an apartment, or have ever dreamed of buying one, this affects you directly. Let's start with the problem. Because to understand why this speech matters so much, you need to understand just how broken the housing market became. Between 2020 and 2025, home prices across the United States climbed nearly 55%. Not over a decade, in 5 years. A home that cost $300,000 before the pandemic now costs close to $465,000. And that's the median. In cities like Austin, Miami, and Phoenix, prices went even higher. At the same time, mortgage rates that were once below 3% exploded past 7%, which means the monthly payment on that same home didn't just go up because of the price. It went up because borrowing the money to buy it suddenly cost twice as much. The result? A housing market frozen solid. Sellers refused to give up their locked-in low rates. Buyers couldn't afford what was on the market. And builders, buried under zoning restrictions, permitting delays, and skyrocketing material costs, couldn't build fast enough to fill the gap. 77%. That's the share of American households that cannot afford the median-priced new single-family home right now. 3 out of every 4 people. That number comes directly from the National Association of Home Builders, and it is staggering. So what changed? On the surface, it started with a congressional hearing, but what came out of that hearing was anything but surface level. The Subcommittee on Economic Growth, Energy Policy, and Regulatory Affairs convened a session with one pointed title: Housing Affordability, Saving the American Dream. And the testimony delivered inside that room laid out something that politicians on both sides have danced around for years. One expert described the current state of the housing supply as, and I'm paraphrasing here, an unstoppable force meeting an immovable object. The unstoppable force is millions of Americans desperate to own a home. The immovable object is more than 33,000 state and local jurisdictions, each with their own zoning laws, land use restrictions, and permitting processes, most of them designed, whether intentionally or not, to keep new housing from being built. The testimony was direct, rolling back federal regulations imposed over the past several years, including green energy mandates on new construction, could alone save tens of thousands of dollars on the cost of a new home. But the real bombshell wasn't just the testimony, it was what Congress moved on after it. The House of Representatives passed the Housing for the 21st Century Act, and this piece of legislation is not a minor amendment. It is a sweeping overhaul of how housing gets built, financed, and regulated in America. Here's what it puts on the table: cutting federal red tape on construction, creating new incentives for states and local governments to reform their own zoning laws, expanding access to new types of mortgage products, and directly targeting the supply shortage that has driven prices to these historic highs. The Trump administration has publicly called its approach to housing reform aggressive. And for once, that word might actually be accurate. But here's the part that doesn't make the headlines. Here's the part you need to hear. Not everyone believes this fixes the problem. In fact, some experts say parts of this plan could make things worse. The contradiction is this: while the administration is cutting regulations to lower building costs, it is also maintaining tariffs on lumber and steel, the 2 most important raw materials in new home construction. Some estimates put the added cost to a new home from those tariffs at $1,750. You read that right. The same policies that are supposed to make homes cheaper could raise their price by nearly $20,000 before a single nail is driven. And then there is the question of HUD, the Department of Housing and Urban Development. Proposed budget cuts to HUD threaten programs that hundreds of thousands of Americans depend on for affordable housing. If those cuts go through, the very people this reform is supposed to help could be left with nowhere to go. So we're looking at a policy package that could genuinely expand homeownership, or one that could inadvertently price out the people it claims to be saving. And the difference comes down to execution. Now let's talk about what the data is actually showing right now on the ground in February 2026. Just 2 days ago, on February 18th, the U.S. Census Bureau and HUD released the latest housing starts and building permits numbers for January 2026. And they came in significantly above expectations. Not slightly, significantly. This is a signal the market is not waiting for Congress. Builders, buyers, and investors are already moving. The narrative of a frozen, paralyzed housing market is starting to crack. Mortgage rates, which sat dangerously close to 7% at the start of 2025, have come down. The 30-year fixed rate is now in the low 6% range. Not the 3% paradise of 2021, but meaningfully lower. And with the Federal Reserve expected to cut rates further as inflation cools, there's a real possibility, not a guarantee, but a real possibility, that rates dip below 6% later this year. Redfin has called this moment the Great Housing Reset. Compass has called it the start of a new era. These are not small words from companies that are usually conservative in their language. But here's what I want you to understand about what reset actually means. Because reset does not mean crash, and it does not mean sudden relief. What we are entering is a slow, grinding, multi-year process of normalization. Home prices in 2026 are expected to rise by about 1%, barely moving, which is itself remarkable after years of double-digit growth. Incomes, for the first time since before the pandemic, are beginning to grow faster than home prices in many markets. That affordability gap is finally, slowly, starting to close. But the experts are being honest. It could take 5 years before the housing market feels anything close to normal again. Millennials, the largest generation in American history, still represent only 29% of home buyers. That number should be far higher. And for Gen Z, the situation is even starker. Many are choosing to live with parents, roommates, or in non-traditional arrangements just to survive the cost of shelter. So what does the speech, and what does this moment, actually mean for you? If you are a buyer sitting on the sidelines, the conditions are shifting in your favor. Not dramatically, not overnight, but shifting. More inventory is coming to market. Sellers are adjusting their expectations. And if you have been waiting for the right moment, the window of opportunity in the next 12 to 18 months may be the best you have seen in years. If you are a homeowner, your equity is largely protected. The doomsday crash scenario that some predicted has not materialized, and with genuine supply shortages still in place, it is unlikely to. But your home's value is also unlikely to rocket upward the way it did from 2020 to 2022. This is a stabilization, not an explosion. If you are a real estate investor, the opportunities are shifting. Single-family homes in high-demand Sunbelt markets remain strong. But the real action is moving toward new construction, builder stocks, building materials, smart home technology. The companies supplying the homes of tomorrow are positioning themselves right now. And if you are a renter, the picture is complicated. Rent growth cooled significantly in 2025. For the first time in 3.5 years, rents went flat year over year. But that relief may not last. With demand for rental units still high and new apartment construction slowing down, rents are projected to rise again by 2 to 3% by the end of 2026. Here is the bottom line. What happened in Washington this week was not just a congressional hearing. It was not just another political speech. It was the beginning of the most ambitious attempt to restructure the American housing market in decades. Whether it works depends on Congress following through, on the Federal Reserve cooperating, on tariff policy being handled carefully, on state and local governments accepting federal incentives to loosen their zoning stranglehold. There are a dozen ways this could go sideways. And there is one path where it genuinely works, where supply increases, costs come down, mortgage rates ease, and the next generation of Americans can actually afford a home. We are, right now, standing at that fork in the road. The speech has been given. The bill has been passed by the House. The data from this month is showing early signs of life. What happens next will determine whether this moment is remembered as the turning point that saved the American dream, or the false dawn that gave millions of people hope, just long enough to break their hearts again. Stay informed, stay engaged, and if this video gave you clarity, share it with someone who needs it, because the housing market doesn't change with a speech. It changes when enough people understand what is actually happening and demand that their leaders do what they promised.